Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While the ongoing trend of dollar strength keeps market participants occupied, another interesting development has emerged with President elect Trump's announcement on key government positions. Notably, a new Department of Government Efficiency, or DOGE, has been created, an acronym that shares its name with the popular cryptocurrency. This department will be co led by high profile figures like Elon Musk and Vivek Ramaswamy, aiming to drive efficiency reforms. On the markets front, traders are increasingly betting on further losses in the Treasury market, anticipating that Trump's policy pledges will spark inflation and keep US interest rates elevated. But inflation concerns are not just present in the US but also in India after the October CPI jumped higher than the RBI's upper target band of 6%. Good morning, JK. A big jump in Indian inflation. While RBI had warned of something like this, are we expecting any policy action to tackle this?
Good morning, Swaraj. No, if you are saying that whether we will tighten, I don't think we will. But yes, the policy easing by RBI timing might be slightly postponed. I think it can happen in February as against January that people were expecting. And yes, jumping to 6.21% above the upper limit of inflation, target band is slightly concerning, but I think they were driven by special factors. Rural inflation was very high, and also the vegetable prices contributed to it, and obviously driven by the festival season demand. And there were some warnings from the RBI also to this extent. If you strip out the vegetable inflation, it's well under control. And the expert opinion is that the full year inflation will still be around 4.6 to 4.7%. And that is quite a manageable number. So no alarm bells here. Yes, headline number does look, a bit concerning, but I think vegetable inflation in India is one of the most volatile number, and it's also subject to the monsoon seasons and harvesting. So I think now that the monsoon is reported to be quite above normal, and also the festival season is over, I think quick moderation in the inflation should be expected. So not much of a concern, at least immediately for the Indian markets as well. Now, if you talk about inflation trade in the US, yes, I think it has been a crowded trade, I would say, because everyone is talking the same theme: higher tariff, higher inflation, higher yield, higher dollar, and the market is not spared any session to position itself for these trades. And therefore, I feel it is quite a stretched trade right now. Who knows? There can be some sort of a moderated approach from Trump in this regard. The appointments that you mentioned about the Department of Efficiency, where Mr. Elon Musk is there, I think he has also made some statements about cutting government expenditure by around 2 trillion. I think not time frame not mentioned, but cutting government expenditure would also mean spending cuts, and that can be actually slowing down the economy. So not no plans are given, but I think we need to wait and watch. It's not like just keep buying the dollar. So there will be some pause in this current trade. That is what I'm seeing. Although the dollar strength is also coming from the fact that other economies are not really in good shape. For instance, yesterday the ZEW economic indicator, sentiment indicator for Germany fell to 7.4 from 13.1 in October. So well below the forecast of 13 also. The victory of Mr. Trump, which can lead to trade frictions, and also the assessment of the current economic situation in the context of the political issues in Germany also contributed to the fall in the index. However, recently we have seen that the the government collapse in Germany is actually leading to a possible better things to come, because a snap election with a stronger government can lead to a quick resolution to the fiscal program or the fiscal stimulus that they are planning to give to the economy. So that's something that we are looking forward to in the medium term. Right now, of course, the German and the Eurozone economy are weaker. We also had a weak jobs report from UK for September, where the rate of unemployment increased to 4.3% from 4% in the previous quarter, and the number of employees also reducing substantially. UK is one economy where they have a huge fiscal problem, high deficit and high borrowing, and also at the same time they are also aiming for higher growth. The market is wondering how this can be achieved, and there is a certain amount of taxation on the corporates in the recent budget, which might lead to further cut down in the employment by these companies in order to cut their costs. So there is a certain fix that the UK economy is faced with, and this could take some time to resolve itself. So as I said, the weak economies in these regions are also contributing to the dollar strength, and that is what is playing out. That said, I think we have hit a very important level in the dollar index, above 106, and then between 106 and 107 lies a very big resistance. Just as we had pointed out a strong support between 100 and 101 when back in September. So that's probably is not going to break immediately, and that's why I feel the euro in the region of 1.06, 1.27 in the GBP, and 155 in the yen probably will hold this current up moves in the dollar, and probably see a modest pullback, if not reversal. Reversal is not anyway not foreseen because of the strong factors in favor of the dollar. On the rupee, we had one more day of outflows from the FIIs after a few days of consolidation. Index also fell by over 1% yesterday on the major indices, and so the sentiment is not very encouraging for the rupee. But yes, the fall in the rupee has also been by a trickle almost every day, and just RBI managing these moves with their intervention. Interestingly, the forward premiums have now fallen to 1 rupee 77 paisa from 193 seen last week, and that's also down to, apart from yield difference narrowing between USD and INR, it's also due to the RBI using the forward route for intervention. So that's probably a factor that we will watch out. We will come to know about their forward position in the coming days when we can also confirm this. But it does look like receiving from the nationalized banks, which indicates a forward selling of dollars to control the rupees fall. So we are heading into CPI from US today, and then retail sales on Friday, and of course with all the key appointments that Mr. Trump is now making, I think we should be getting some sort of statements from these officials, although they take charge only on January 25th. But I think policy indications are what the market is looking forward to before it moves ahead further. Thank you.
Thank you, JK. And just quickly summarizing, Indian inflation at the upper limit of the inflation target band, but the key was in details, because vegetable prices and festival demand have seemed to have driven up the inflation. But if we strip out the vegetable prices, it's still within the band and it's quite comfortable. The higher inflation, tariff, and higher dollar trade seems to be quite crowded now, as most people talk about this. And I think the risk to this view is any moderation of Mr. Trump's policies, as JK mentioned. On the European front, German zoo sentiment fell quite a bit, quite significantly. The political issues, which is with respect to their coalition government falling, and possible friction with the new US president, has resulted in this fall. UK September unemployment rate increased to 4.3%. This was quite high. Dollar index hitting 106. Now the 106 to 107 levels are important resistance levels, as JK mentioned, and there can be a possible or a modest pullback from these levels. For Rupee, we continue to hit all-time lows as India experienced some FII outflows once again yesterday due to the fall in the equity indices. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.